Hey traders, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and subscribe. In this video, we're going to talk about how to create a trade plan. Okay, we're going to go over what is a trade plan, your risk versus reward, trading psychology, have a trading journal, and how to follow your trade plan. So let's jump right into it. Number one, what is a trade plan? A trade plan is multiple things, right? There's not one definition of what a trade plan is, but I'll give you an example of a way to create a trade plan. The first thing you want to do with that trade plan is talk about or write down what is your trading strategy. Okay, are you looking for divergence? Are you looking for Fibonacci's, support and resistance levels? Are you trading stocks, options, right? So you want to go through and kind of figure out what your trade plan is and what asset that you're actually going to trade. And then from there, you can also put down what your rules are for that trade plan. So that is kind of essentially what a trade plan is. We're going to go over a little deeper into it in a second. But first, make sure you check out my website, daytradingfearless.com, to sign up for the $99 lifetime subscription special for the weekly S&P Emini trade zones. These are zones where I give you resistance, support, open gaps, and open VPOCs for the following week trading. You also, in the member section, will receive a 2-hour trade zone training video course where I teach you everything about the trade zones, how to draw them, so you could trade any stock, future, or cryptocurrency. And you also get the member section with all the resistance, support levels, and things like that to draw on any chart. So make sure you check it out. Links down below, but right back to the video. Okay, so with that being said, let's go to number 2, right? Which is risk reward in your trade plan. So your risk reward could be anything. You could say, hey, I want to risk 1 to make 1. I want to risk 1 to make 2, risk 1 to make 3, so on. Or you could say, hey, I believe in this trade plan or this trade setup so well, I'm willing to risk 2 to make 1. Think of it this way. When you do sports betting, right? If you're a football fan, right? And we'll just talk about, since I live here in Vegas, Las Vegas Raiders are going to play, we'll say, Tampa Bay. Okay. With that, or actually, let's use the Rams. Okay. The Rams are 10-1 on the season. The Raiders are 3-7 or 3-8 for the season, right? Well, Tampa or the Rams are actually going to be favored. So if you go to the casino, you're going to have to lay, we'll say, $200 to only win 100, right? Because they're the favorite team. They have won all but one game. And the Raiders really haven't won that much this year. They don't have a good team, things like that. So you would risk 200 to make 100. Okay. So it's totally backwards. So is it better to bet the underdog, or do you have a higher probability of winning because the better team's playing the worst team, and chances are the better team's going to win? Well, you're going to have to lay more money out for that. And risk rewards the same thing. There's a lot of trades that I do, especially my divergent scalp trade, where I might risk 6 ticks to only make 4. But I'm okay with that because I know there are also other times where I'm risking 2 ticks to make 4. And at the end of 1,000 trades, I'm going to have about a 50-50 risk reward, right? But my probability of, with all my rules that are in my own trade plan, those rules is I will have about an 80 to 90% win rate with a 50-50%. I'm okay with that on the long haul. So hopefully that kind of helps. So always make sure you kind of figure out what your risk reward is on that trade. Now, other people are like, hey, every trade I take, I want to risk 1 to make 3. I'm okay with that. If that's what's in your trade plan, that's up to you. You have to figure out what your trade plan is. Number 3, trading psychology is huge in your trading, right? Think about it this way. Trading psychology is 9%. Learning the charts and your strategy is 90%. Learning the charts and the strategy is about 9%, and then the 1% is clicking the mouse. Trading psychology is huge because when you're on fire and you're winning trades, life is great. But when you actually start to lose and the market changes and you're trying to adjust with the market, that is a very hard thing to deal with. And I'm not going to lie, the month of March, I went into a slump that it felt like every day I was losing trades. No matter what I did, the market just wasn't doing it. The setups I would take, and then it kind of messed with my psyche, and I wouldn't take the very next trade. Listen, I've been doing this for 21 years, and I still have issues. I think everybody does. And so you got to be careful not to over trade, not to go on tilt, but be able to recognize that the market isn't doing it. And thank God I recognized that early on in the month, where the moment I recognized it, probably within the first week, I'm like, okay, let me drop all my share size way down, right? Let me just try and get through this storm. It's almost like a sports player, a baseball player. Dude, for the last 3 months, they've been on fire. They hit 25 home runs. They're batting 400, right? And then all of a sudden, they can't even hit the ball for the next couple weeks. And that's like, it just becomes a psychological issue. So trading psychology is huge. Make sure you become very self-aware. Have a trading journal. Early on in my career, I would write down each and every single trade, why I took it, what the charts looked like. And then every day I would read what happened after that, right? I write everything down, then I'd go back, read it, so it gets drilled in my head. And then on the weekend, at the end of the week, I would go back and read the entire thing, and you'll start to see where your problems in trading are, what's good, what's not, things like that. And you'll start to be able to recognize them and pick them up during the trading day and fix those problems. So make sure you have a trading journal. And then finally, number 5 is follow your trade plan. Write the thing down. Do everything I talked about and then follow it. Okay, when you start to break it, go back and read your trade plan. Maybe every single morning, right? For the first few months, drill that trade plan and stick with it. Now, you can always update it, and as you grow as a trader, you'll be able to revise it and make it better and better. And I think as you do all these steps, you will become a lot better trader. You will become a lot more disciplined. So hopefully that helps. If you guys have any questions, leave them down below. But as always, thank you for watching, and we'll talk to you soon.